Oh, that's not the subject you want to hear about when you come on YouTube. Life insurance. I get that, but wait. 53% of people in the US, 58% of the people in Canada, and 90% of households in Japan have one. So you might as well know about it, because at some point in your life, very soon, you're gonna have to renew your contract or get your first one. And it's a big decision. You don't want to mess it up. Did you know there is the whole life insurance and the term life insurance? No? Well, in that case, that video must be for you. Because you don't want to mess up this decision. Which one should you choose? What are the differences? What are the advantages and the inconvenience? And when should you take one? And by the way, what do I do with it? All of that in today's video. That should be interesting. My name is Yoram from Economia. Welcome back to the channel and let's talk about life insurance. Life insurance is a way to provide some financial support to your loved ones, called beneficiaries, when you pass away. I know, it's not a fun subject, but I checked the statistics. Everybody eventually passes away. So it's up to you to make sure that your loved ones will receive some monetary support so they don't have to worry about it, on top of the emotional stress. How much money will they receive? We'll talk about it in a moment. But first, did you know there are two main types of life insurance? Term life and whole life. Let's dig into it. Term life, as the name indicates, is a life insurance that runs for a certain term. It can go for 10 years, 20 years, 30 years, 40 years, and in the eventuality of your passing, during that time, your loved one will receive a payment from the insurance company. Pretty simple, right? It works the same way as car insurance. If you get into a traffic accident while you're covered by your car insurance is going to pay you money for yourself and for the car. It's the same for term life insurance. If you unfortunately pass away during the time you are insured by a term life insurance, your loved one will receive some money. So the same as car insurance. If you are insured, you receive money. If you're not insured, you don't receive money. Same for term life. How long should you get it for? I'm not a financial advisor and you should speak to a professional and do your own research. But most people say that if you are in your 20s and healthy and starting with your life, you should get 20 years. The reason for that is that as you grow older, maybe your family situation is going to change. Maybe you're going to have dependent, you're going to get married, get a house. A lot of things can be different. So you may want to upgrade over time your insurance. If you get it for too long, then it's more difficult to upgrade. And every time it comes to term, if you take 10 years or 20 years, you can upgrade it and change it. Plus, it's quite cheap, especially if you start early. As we get older, usually our health deteriorates. So the premium tends to go up. So it might be better to get it while you're young, 10 years, 20 years increments, and see how your situation changes over time. I checked the stats and it seems that most of you, dear viewers, are not subscribed. If you like this type of content and would like to know every time we publish a new one, you could subscribe. It would make it easier. And it would mean the world to us and help us make this video viewable and available to more and more people. You can also like and give comments. Thank you very much. Let's continue. Now that we've talked about term life, we should talk about whole life. As the name indicates, that contract is for your whole life. You contract one day and it's valid until you pass away. And when you pass away, then there is a death benefit, that's how it's called, that is being paid to your loved ones or your beneficiaries. Pretty simple, right? There are actually two components of whole life. You have the death benefit and you have the cash value. And your premium actually goes in both parts in unequal amounts. The death benefit is very simple. As the name indicates, it's the money that goes to your loved ones when you pass away. And you can basically select how much money you're insured for at the very beginning. We'll go back to that in a moment. Then you have the cash value. This cash value actually is like an investment. Yes, it's like an investment. So part of your premium is actually invested and will compound over time, and you would be able to do a few things with that. Let me explain. Over time, the cash value increases, as I was mentioning, and it's reinvested, and the return on investment is about 1.5% and a bit more. See on screen what you have. So it's very low, but the advantage that over time it's going to compound and get bigger, and you can actually withdraw some of that money for a purchase. You can withdraw some of it to complement your income in retirement, and you can also borrow against that value for an investment. Then you have to pay it back. If you borrow against your own money, against your own cash value in your own life insurance, you're going to have to pay an interest. So you're going to have to see if the investment you're making gives you a higher return compared to your interest that you have to repay, and see the difference and see if it makes sense for you, right? So a lot of people are using that and they're calling it infinite banking, a lot of other words. I'm not going to go into that. I'll leave some links below for you if you want to go deeper into that. This investment part, this cash value, like I said, has a very low interest rate, a very low return. So actually, it doesn't make sense so much to consider it, except if you have a large amount of money already and you pay your premium upfront to park a lot of money there because there are some tax benefits. I'll let you dig deeper. I personally do not play with the cash value, but that's something worth considering. Now that we know what types of life insurance there are, how much should your coverage be for, and which one should you choose? Let's start by the coverage amount. It depends on whom you ask, but the consensus is that you should have a coverage equivalent to 10 to 15 times your annual income. So let's say you're making $50,000 a year. Your coverage should be between $500,000 and $750,000. And that should cover everything. You can be higher, but that would be the basic. Others are saying that you should calculate based on adding the loss of income, the cost of education for your loved ones, kids or grandkids, whoever that is, remaining debt, maybe your mortgage if it's not paid back or if it's not covered in other ways, adding it all up and multiply by 10 to 20 to get the coverage you should get. There are many online tools to make those kind of calculations. I'm giving you a couple of logos online and I'm going to put the link down below. Do your own research to see where you are and also to see how much money it would be in terms of yearly premium. So now, which one should you choose? Remember, I'm not a financial advisor. I'm just a guy on YouTube talking about the information I'm finding and my own experience. So please talk to a professional and do your own research before making any financial decision. Most people would tell you that if you're young, healthy, and about to start a family, you should take a term life of about 20 years and upgrading it over time. And if you manage to be financially free at some point in time, you won't need it anymore. That's more the Dave Ramsey way of thinking. And it's really, really cheap compared to the other option, which is the whole life insurance. If you're taking whole life, there is some benefit there. Obviously, a lot of money going at the end and you don't have to renew it. However, it's quite expensive compared to the term life. And my own situation, you may ask? Well, I have term life already going on for my family and I've upgraded it over time, but I also have whole life. And the reason why I have to is because the whole life was necessary for me to get my mortgage loan in the house I'm filming today. And I'll talk about that later. So I have both, but honestly, I only needed term life, 50,000 for the mortgage. So life insurance is not an easy subject, but if you're young, starting your life and have loved ones, it's a good idea to protect them and upgrade over time. And depending on the situation, it could be an additional investment vehicle. Speaking of investment and diversifying, I'm into real estate, as you know, and wherever you are in the world, investment, rental property could be something interesting. I put all my thoughts in this video if you want to have a look. If you like this video or learned something, please give it a like. Do not hesitate to subscribe and leave any comment you have in the box below. Thank you again for watching, and until next time, goodbye.